Hey, what up, YouTube? It's your boy, the Stock Dude, back on the prowl again. Now, if this is the first time that you're stopping by this channel, first of all, I want to thank you guys for taking the time to stop by and check your boy out. Secondly, I want to ask that you hit that subscribe button, turn on your notification bell. That way, when the next hot video comes out, you'll be alerted and you won't miss a thing. Now, I got two stocks for y'all today that are on my watch list. That's right, two stocks that I'm going to have my eye on first thing Monday morning. First thing tomorrow, two stocks from my watch list. Now, one of those stocks is a closed-end fund. Now, those that are not new to the channel have heard me talk about closed-end funds for months. Second stock is what I like to call a high flyer. Now, if you want to really invest like the rich, you need something like a closed-end fund in your portfolio. Hopefully, your self-directed IRA account, like I always recommend. Second thing you want in your personal self-directed IRA account is a solid growth stock that has high potential. Guess what? I got both of them, two of them. One, a closed-end fund that's solid and pays a crazy, huge dividend. Second one is what I like to call a high flyer that'll give your portfolio a lot of growth potential for the future. But this first stock, direct your attention to the screen, is a closed-end fund. Now, for those that don't know, or for those that don't remember, or for those that didn't see the previous video, a closed-end fund is a portfolio of pooled assets that raises a fixed amount of capital through an initial public offering, in other words, an IPO, and then lists shares for trade on a stock exchange. Like a mutual fund, a closed-end fund has a professional manager overseeing the portfolio and actively buying and selling holding assets. Now, one thing I like about closed-end funds is just what I read. A closed-end fund has an active manager. In other words, when you deal with a closed-end fund, somebody is actively managing your investment. Not like your traditional 401k plans, where a lot of times when you have a company sponsored 401k plan, a lot of times it's on autopilot. Like I say all the time, when you get hired, you tell them how much you take out of your check. Normally, like we always do, it's the lowest amount. And then every time you get paid, whether it's weekly or whether it's bi-weekly, they automatically take that percentage out of your check and automatically put it in that fund. You know, that fund that when you got hired, that one where you don't understand, the one where you don't know the company's in, yeah, that fund. That's why I say a lot of this stuff, if you can avoid it and cut out the middleman, do it yourself, man. Like I always say, you can pay somebody to brush your teeth. You can pay them to brush your teeth. But don't you want to do it yourself? Ain't no need to pay somebody to brush your teeth. Pick the toothbrush up in the morning and do it yourself, man. Stop being lazy. But a closed-end fund, to me, represents a way that the normal guy, the little guy, us little fishes, we can actually invest like the rich. Because a lot of people who got money got closed-end funds on their watch list for tomorrow, just like I do. Now, the name of the closed-end fund and the company that I'm talking about goes by the name of Oxford Lane Capital Corporation. Oxford Lane Capital Corporation, ticker symbol OXLC, comes in at $6.69 per share. Now, right off the bat, I can tell you now, that's not a whole lot of money. I might not have a whole lot of money, but I got $6.69 per share. Now, like I always do, I go right to the bottom of the screen, checking out my volume, people. Checking out my volume. Now, what I noticed on Friday, the average volume was 995,078,000. But on Friday, the volume came in at 1.2 million shares. So what that tells me is that brand new money has just started to come into this stock. Now, I'm going to tell you a little bit about this company for those that don't know. Now, OXLC Capital Corporation, once again, it's a closed-end fund. Now, this closed-end fund pays a 12% dividend. And this dividend payment is made on a monthly basis. Now, like I always do, I'm going to give you an example of what that actually means dollar-wise in your portfolio. Let us say you own 1,000 shares and you're getting paid a 12% plus dividend. I'm going to go to this website that I use called the Dividend Channel. Now, on this website, if you decide to use it, when you get to the dividendchannel.com's website, right here where it says enter symbol, you're going to put your ticker symbol. In this case, I've already done it, but the ticker symbol is OXLC. And what this does on this website is it pulls up the dividend payment. Now, right here, first thing that sticks out to me, the average broker rating. Now, brokers are the ones who recommend stocks. They know more about these companies than you, and they know more about these companies than me. They have a strong buy rating of 100% on this stock. Now, outside of that, that's one thing that I do like. Another thing that I like is that this pays a monthly dividend. Once again, strong buy rated company. I like that. Another thing that I like, this pays a monthly dividend. And the last dividend was paid just last month. And it came out to be 6 cents per share. Now, I know a lot of you people probably thinking like, well, what am I going to do with 6 cents? I'm going to show you what you can do with 6 cents. Let us say that you own 1,000 shares and you're getting paid 6 cents. Actually, it's almost 7 cents because it's 0.068. But we're going to say round it down to 6 cents. If you own 1,000 shares, which is not hard to do over a period of time, for those 1,000 shares, you'll be getting paid $60 per month for that 1,000 shares at a 12% plus dividend, monthly payment of 6 cents per share, $60 a month times 12, because we do know it's 12 months in the year, right? That comes out to be $720 a year on dividend payments alone. That is significant, because if you put your money in a bank account, a savings account, even if you put your money in a credit union, I guarantee you won't be making 12% interest in a year's time. So once again, OXLC Capital Incorporated, looking at the chart looks good. And just the past week, the chart actually broke out, and looking at the extended and the extra volume that's going into this stock, it looks good on a breakout, just breaking out, starting to move higher. And this, like I always say, it seems to be, this chart's telling me a story, and I'm reading the tea leaves, and I'm looking at what the chart is saying. What you say, chart? Say it again, chart. The chart is saying it's going up. So not only are you going to get 12% dividend on Oxford Lane Capital Corporation, you are also going to get what's known as capital appreciation, which means it's going up. The share price now is $6.69 per share. Capital appreciation tells me that in the future, the shares of Oxford Lane Capital Corporation will be higher than $6.69. Now, once again, I got some things that I like about this stock that I got to tell you, and I got to tell you about what I don't like. I've already told you what I like is a 12% monthly dividend payment. That gives the stock in your portfolio stability and better than average volume traded on Friday. 12% plus stock appreciation. Those are the things that I like. But what I don't like is the fact that I'm looking at this dividend payment. What I don't like is the fact that last year in June, they actually cut their dividend. It used to be $13 per month if 4,000 shares, or if you had less, 13 cents per month per share. They cut the dividend in the middle of last year and went down to 6 cents per share. Now, I'm going to be honest with you. I don't like that. I don't like that. So my advice to you is, if you decide to invest in Oxford Lane Capital Corporation, and if they so happen to cut that dividend again, sell it. Sell it and move on to something else. If you don't know what to put your money in, if they cut that dividend, keep watching this channel, because I got your back like vertebrae. I'm going to find you something else that'll pay you a nice dividend if they cut their dividend after you purchase shares. So if they cut the dividend on me, I'm telling you, I'm out. I ain't putting up with it. You can cut my dividend, think I ain't gonna say nothing about it. I'm gonna say something about it. I'm gone. Now, the number 2 stock on the list that I'm watching tomorrow. I've talked about this stock a few months ago. This stock is a high flyer, but it does carry a significant amount of risk. This stock goes by the name of FuboTV Incorporated. Ticker symbol FUBO. 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 I like FUBO. I talked about this, I think it was in February. I talked about this stock. Now, since then, the stock has, to be honest, taken a beating. At the end of last year, this stock traded as high as $62 a share. But with the market sell-off, especially the sell-off that has been taking place with the tech stocks and the high flyers with a high valuation, in other words, stocks that are high in price, where the earnings are expected to grow but have not yet caught up to the stock price, like this one, FUBO. Back in December, once again, it traded over $62 a share. But since then, the end of December all the way until now, it has sold off from a high of $62 a share. And right now, FUBO is coming in at a price of $23.31. Now, I know you're probably wondering, well, stock dude, if this has been selling off since the end of last year, 2020, man, what in the world make me want to buy it now? How do I know that it ain't going to continue to sell off and go lower, stock dude? Talk to me, man. How do I know? I'm going to tell you how you know. You don't know it ain't going lower, because it very well may go lower. But one thing I can tell you, if you got a sense to look at these stock charts tell a tale. Looking at this chart right here, I see that right near the $20 mark, right near $20.36, we have a solid and a strong line of support. And just on Friday, this candle right here, each one of these candles represents a day's trading. On Friday, which is the last candle on the end, the most recent candle, the volume that I see The average volume is normally, now check this out, the normal average volume is 19.77 million shares. That's a lot. But look at what happened on Friday. Ladies and gentlemen, boys and girls, I'm trying to tell you, it's going up, because on Friday, the volume was 105 million shares, 137,521 shares traded on Friday. Let that sink in. The average is 19.77 million. That's the average. That's what they normally trade. Shares bought, shares sold. But on Friday, over 105 million shares traded. FUBO. Now, just to give you a little bit of info on FUBO, FuboTV Incorporated operates a live TV streaming platform for live sports events, news, and also entertainment content in the United States and also in Europe. Its FuboTV platform allows customers to access content through streaming devices, as well as on smart TVs, computers, mobile phones, and tablets. Now, to get a good understanding of what FUBO is all about, think of Roku. Think of Netflix. FUBO, ticker symbol FUBO, FUBO. FUBO. FUBO is like finding Roku and like finding Netflix in the beginning stages. Now, I gotta tell you the truth, as I said earlier, this is a high flyer, and it very well could go lower. But for just the price of $23.31 with heavy volume that just came in on Friday of over 105 million shares. Now, when you see money thrust into a company like that, it's like I always say, it's like putting a big fire hose from the fire department in your bathroom bathtub. It's a whole lot of pressure for that small tub. So if you put a fireman's hose in your bathtub, it'll blow you out the water, man, and push your head up to the ceiling until you get a knot. Nobody want no knot. But what I do want is a knot in my pocket. And I believe that buying shares of FUBO at $23.31 with that heavy volume of over 105 million shares came in on Friday, coming off of that support level, I think anywhere above $20, FUBO is a safe bet. Now, if FUBO happens to fall below $20, I would look at that chart and I would consider selling, because if it falls below $20, it may go even lower down to this, what is that, $16 range. Ain't nobody got time for that. But as long as FUBO is over $20 per share with what I said earlier, what I said about that, heavy volume, FUBO, let me check my notes, it's going up. I see it right here. It says it's going up. So those two stocks are on your boys' watch list for tomorrow. First one, Oxford Lane Capital Corporation, ticker symbol OXLC, paying a huge 12% dividend. It's a closed-end fund. Second stock that's on my watch list, FuboTV Incorporated, ticker symbol FUBO, FUBO. Each one of these are on my watch list as early as tomorrow. Now, like I always say, I am not a stock expert, nor do I play one on YouTube. So anything that you hear on this channel or any other channel, make sure you do your own due diligence and do your own research, man. Check it out for yourself. Read about it, learn about it. But while you reading about it and learn about it, I'm being about it. Because these two right here, going in your boy's portfolio. But don't do it because I say do it. Do it because you want to do it. I'm the one known as a stock dude. These two stocks is on this dude's list for tomorrow. I hope you enjoyed the video. Holler at your boy later. Peace.